Hi everyone, my name is Karan Pisham and today I am here to introduce my presentation that is totally based on the introduction of the goods and service tax that is also known as GST. So in the first slide there is a welcome to our session on GST. And so in the first slide that is what is the GST. So the GST is known as goods and services tax. It is a value added tax applied to most goods and services sold for domestic consumption. The key point to understand here is that while consumers pay their tax, it's the business's responsibility to collect and remit it to the government. Essentially, GST is a consumption tax that helps in maintaining a consistent revenue stream for the government. So on the next slide, why is GST important? GST is important for a couple of reasons. Firstly, it is major source of revenue for the government, which helps fund public services and infrastructure. Secondly, for businesses and accountants like us, understanding and complying with GST regulations is important to maintain accurate financial reporting and ensure that we meet our tax obligations. Proper GST compliance also helps in avoiding legal issues and penalties. After that, who is required to register for GST? And businesses with an annual turnover above a certain threshold are required to register for GST. This threshold varies by country, but it's important to note that once your business crosses this limit, registrations become mandatory. Additionally, businesses below this threshold can also opt for voluntary registration. However, this comes with its own set of rules and implications. After that, how GST works, like output and input taxes. The explanation is that GST works through a system of output and input taxes. Output tax is the GST you charge on the goods and services you sell, while input tax is GST you pay on your business purchases. Businesses can claim input tax credits, which allows them to recover the GST paid on eligible purchases. This system helps in reducing the overall tax burden on businesses, as they only end up paying the GST on the value they add to the goods and services. After that, filing GST returns. GST returns need to be filed regularly, which could be monthly, quarterly, or annually. That is totally depending on the size of your business. Filing these returns on time is important because late submissions can lead to penalties and interest charges. It's important to keep track of the filing deadlines to ensure compliance and avoid any unnecessarily financial setbacks. How to calculate GST? Calculate GST is relatively straightforward. For example, if you sell an item for $100 and the GST rate is 5%, you would add 5% in GST, making the total price $105. It's a simple multiplication for the sale amount by the GST rate. However, it's important to ensure that these calculations are done accurately to avoid any discrepancies in your counting. Input tax credits. Input tax credits or ITCs are the key component of the GST system. They allow business to recover the GST paid on purchases used for business activities. However, not all purchases qualify for ITCs, so it's important to be aware of the specific rules. Properly claiming the ITC can significantly reduce your GST liability, but this requires careful tracking and documentation of eligible expenses. GST invoices. A GST compliant invoice must contain specific details to be valid. This includes your business name, GST